Jim. Welcome back to Face. And, you had a great idea when your interview was announced. You put out a question to what people would want to hear about. And I think there's a few things you're going to present that came from the X community. How you doing, buddy?
Good. How are you?
I'm doing okay. So, is the VIX going to 12 during this melt-up?
Well, let's find out.
Okay. So, if you have an interest in the VIX, here's a guy with a doctorate in the VIX. So let's see what you have for us, buddy.
Yeah, I actually am good friends with the true Dr. Vix, a guy named Russell Rhodes,
Oh,
who does have his PhD and
okay.
has a lot of experience going back to SIBO days. I originally met him when I went to SIBO to take a seminar on volatility that he was teaching. This is going back a long way, and he and I
Yeah.
have been buddies ever since. But yeah, no
Cool.
PhD for me, but I've learned a little bit, um, you know, paying attention to markets and people like Russell and a number of others. So anyway,
Yeah, and
yeah.
I've seen your VIXometer.
The
Yeah,
VIX mix, it's
yeah,
coming.
yeah, and I've seen it show caution
Hmm.
before we've had some pretty good sell-offs. So I think it's a great tool that you developed, and it gives people a heads up.
Well, I appreciate that, Dale. And the question now is it okay to go back in the water? Um, let's take a look. Uh, Disclaimer, disclaimer, disclaimer. So, the question right now is, has volatility finally gone back to sleep, right? We're down below 15. 16 is, if you believe the rule of 16, a 16 VIX says that the S&P will average a 1% move over the next 30 days. We're not seeing 1% moves. So, we have definitely seen the VIX come back. I've highlighted some of the recent episodes, but it seems like we're back in safe ground.
Right.
Um, this is one look at what the VIX mix says, and to your point, back in basically starting in January, we couldn't get a green reading even as the S&P moved higher into the end of February. That February move was,
Yeah.
a high for SPX. But the volatility world, as I look at it, was not confirming that with a bullish reading. And sure enough, we had, an initial sell-off, a little rebound, never got back to green territory, and then the tariff tantrum sell off to the bottom in April. Um,
Yeah.
as things have recovered, we've been getting a lot more green readings,
A lot.
and
Yeah.
so it would suggest that people are feeling better. You used the word complacent. There certainly could be some complacency because we're back to buying the dips. We had that one uh, scary dip on the jobs report
Right.
back in right at the beginning of the month, but that's in the rearview mirror now. We've had a whole bunch of green shoots at the right side of this chart, and so people seem to be feeling pretty comfortable again. The latest reading from last night of this composite, and it's a composite for those people who haven't heard me yap about this before. It's a composite of 17 different component indicators that I track, and then roll up into this single gauge. We're at 75% solidly in bull territory, picked up 4 points yesterday. Um, if we look at the SIBO term structure, I like to use this as a picture of the term structure because when we look at VIX 9-day, VIX 3 month, 6 month, 1 year, we're looking at constant maturity measures of implied volatility, where the futures, and I'll come to the futures, but the futures, roll. And so every day we've got a slightly different picture. But what this shows, and it's actually kind of obscured, but if we go back to that mid-February high for the S&P, this term structure was down low. We got crazy with the tariff tantrum. We had VIX close at a level above 50 on April 8th. We've come all the way back. So, it's as if the tariff tantrum never happened from the perspective of the SIBO volatility term structure. Likewise, if we look at the VIX futures term structure, this actually kind of obscures the current level of contango. We've got a good, 4 to 5 points from the low to the high, and that level of contango is up in the 90s in terms of percentile spreads going back to when the VIX futures were introduced in 2004. So contango is back. It's a tailwind for people who want to short volatility in one form or another. And, so it's a much healthier look than what we saw at the peak of the tariff tantrum. Sorry about that.
Okay, I want to ask you something, Jim, that,
Sure.
August, pretty quiet month, so you
Yep.
can understand complacency and no major moves, although last year, yeah, we had the bear
Yeah.
rate with the yen carry trade. Is there anything that you could see that says September could be different than what we've seen throughout the month of August?
It's hard to pinpoint anything right now. And if we look back
Okay,
historically, August, September, October, can be more volatile months. We had the the August problem last year. If you go back to uh, 2015, 2011, we had huge VIX spikes surrounding specific events during those time frames. Um, we're living in a crazy world where things can change rapidly, and the level of calm, given all of the shenanigans that are going on, most of them emanating out of Washington, D.C., is pretty remarkable. I mean, it's the resilience of investors to say, hey, that's all just noise. I need to keep I need to keep
yeah.
invested. I need to keep putting money in the market. Otherwise, I'll
Okay.
get left behind. And if you're an advisor, as I am, if you're too cautious, you
Right.
get
You get
fired.
fired. Yeah.
And
Yeah.
so there's a there's an impetus to be invested, be active, um, and uh, we'll
Ro
see how that works
just
out.
just keep rotating.
Oh,
I mean, everything's. I don't think any of these money managers, when they liquidate something in the old days, they would go to
mm,
cash and wait
hmm
for their next trade, right, to deploy it. But
right.
now it seems like the same day, or probably maybe even simultaneously, when they're liquidating something, they're buying something else right away.
I think that's true in many cases. I think the other things that we're seeing, I mean, look, at least in this environment, cash is yielding something. So you can, take a little breath to determine where you want to redeploy. The other thing that we've talked about before is the rise in so-called defined outcome or buffered ETFs, structures that we used to call structured notes or structured products. And so the advisor community has definitely uh, picked up a lot of momentum uh, putting assets into these, you know, option overlay strategies where there is some element of protection embedded in the structure. And so I think that's the other thing that we've seen. And it's certainly the other thing that has had an impact on the whole volatility complex, because generally, those structures are selling premium. They're selling volatility in one form or another. And so that's part of what has led to the VIX futures term structure, as an example, returning to a level of pretty steep contango.
Okay. So what was the question that was asked? Oh, good. No, go ahead with the
No,
go
yeah,
ahead.
let me just rip through a few more. So if we look at where we are now and where we came, this is one of the things I look at is just, how volatile is the price action of the S&P 500? And I like to look at that using average true range, and average true range is a percent of the S&P price to make sure that, we're getting comparable readings over time. Go back to COVID, we saw this spike to 5.5-ish%. The tariff tantrum was 3.5. We're now back down below 1. And it's below 1, where we get sustained periods below 1, tend to be synced up with strong bull markets. So, we're back down below 1. Are we going to stay there? We'll see. But, to the extent that we can stay below 1% in terms of the average true range of the S&P, that's a good sign for the bulls. Looking at that with and adding in the VIX, when we have the S&P volatility down below 1, and we have the VIX also down below 16, again, that the combination of those two things, it's almost always going to be, bull market conditions. And you can see there are a couple of places where I've highlighted in yellow, where we've kind of got mixed signals. Yeah, the VIX is back down below, but it's had a couple of little bumps along the way. If we can settle out in a place where VIX stays below 16, maybe just muddles around in the low teens, and the S&P volatility stays low, that would bode for the market to continue higher. We shall see. This is just one of the things I keep an eye on to tell me, kind of give me a sense of the temperature of the market.
Okay, so
Um,
we're getting mixed messages right now.
yeah, right now we're getting mixed messages. So this picture actually goes to one of the questions that came up when I asked people for questions. And it's, for me, it's kind of an actionable picture of the volatility term structure. And what it's doing is it's looking at, it's taking two snapshots of the VIX futures. One is the medium term VIX futures, and the other is the short term VIX futures. And these, are have been turned into exchange traded funds. VIXM is the medium term, and in this case, I'm using VIXY, the VIXY, as the short term. And if you look at the ratio of those two things, and there's some logic behind it, when that ratio is trending higher, it tends to coincide with the market being just fine. And when that ratio rolls over, it tends to coincide with the market not doing well. Um, and having some background in technical analysis, I can slap some moving averages on there to smooth things out, and then look at the relationship of those two moving averages. And it's kind of a quick way to just kind of see where things are, what the conditions look like. Excuse me.
Jim, that at the lows that we had,
Hmm.
the green moving average was way below the red line, and
Hmm.
now we're way above the red line.
We
That it,
we we are we're kind of stretched to the upside.
Yeah.
This is one of those things, Dale, where you say, okay, when you get that low, as we were in April, you can't be surprised if you've kind of stretched to the downside.
Mhm.
And conversely, when you get stretched as wide, it's kind of like the crocodile opening its jaws.
Right.
Um, you know, you might want to just take a pause and reflect on, how you're positioned, whether you might want to put some hedges on, take some risk off. It can go on for a while. Obviously, this thing turned positive the 1st of May, and it has
Yeah.
been positive ever since. And certainly, if you've been long the S&P since the 1st of May or short some volatility since the 1st of May, you've been doing pretty well.
Yeah.
As a quick and dirty temperature gauge, I like this one, and it uses, you know, basically two spots on the VIX future term structure to, come up with a picture. I won't call it a signal, but a picture.
Okay. Yeah, I mean, that's a pretty big gap between those two. It's saying, you know, smooth sailing ahead.
Smooth sailing ahead, yeah. Uh, so this is another look using, instead of the VIX futures, looking at the SIBO term structure and basically saying, okay, if I compare the VIX to the VIX 3M and the VIX 3M to the VIX 6M, and how are those ratios behaving, and where do those ratios tell me that things are either good or bad? I've highlighted the places where they suggested that you might want to take some caution. And this goes back, if you go back to July of 2024, people thought, "Oh my God, this is over. Now, this thing happened overnight, this yen carry trade thing." Well, the SIBO volatility term structure was, had a yellow light that blinked on in early July. And, it was basically telling you this is going in the wrong direction. I mean, it was, even as the market continued higher, this was saying people are, taking some risk off the table. People are hedging. People are moving that volatility term structure to a more defensive place. We saw something similar in the run up to the election, right? That turned out to be, kind of a non-event. Um, a very quick move surrounding the December Fed meeting that took people by surprise. And then, coming into the tariff tantrum, from that high in February,
Yeah.
at that high in February, this thing was saying, watch out, guys. This could go the other direction. And certainly in the tariff tantrum, we had a peak. Right now, it's basically saying, don't worry, be happy.
Yeah.
They're both moving down, and there's a wide spread between the two of them. So this is another one where, I can quickly look at this and say, as scary as all the headlines are, the volatility term structure is not too worried.
Okay.
But if that
So,
turns up,
okay.
I'm paying attention.
Okay. Jim, you've been in the business long enough to know that, when the money comes back to the table,
Hmm.
that if they want to buy something, they're pretty good at engineering a decline so they could accumulate. And vice versa, they want to get short, they can engineer a rally to distribute. So I think we'll have some answers next month. Personally, I'll be glad when this month is over and there's more liquidity in the market, and
Yep.
that way your
Yeah,
stops
and,
don't get
and
run. Go ahead.
yeah, and I'm not one of those big guys, but my experience is that, if you know where to look for the breadcrumbs, you can find a trail that suggests what might be going on and, act accordingly.
Okay.
This is another similar view. This uses the VIX futures, and something that, so I said earlier that the problem with the VIX futures is every day, the front month is one day closer to expiration. So, comparing the VIX futures to the spot VIX, which is a constant 30-day maturity, is, you got to manipulate the data. So I use something that I call VIX 30, which basically takes the front 2 months and weights them to give me a 30-day maturity VIX future. I call it VX 30. Um, it's we'll come back to it anyway. The spread there, we would expect the VIX futures to have a premium to spot VIX. And what this is saying is, we recently got to the 98th percentile. You were talking about the spread on that other
Yeah,
chart. This is the
yeah,
same idea where, it doesn't get much better than that.
yeah,
Um, the bullish signal from that, has kind of tapped out, and we've seen it come back in a little bit. It's still in the 90s or the high 80s, so it's still signaling that conditions are bullish. Um, but they got to a place where it was hard for them to get any more bullish.
right. Okay, so that's how we had that little sell-off, and it happened around the employment number revision,
Yep.
right?
Yeah.
Okay, all right.
So, so I did ask for some questions and I picked a few. Where can I get VX 30 data? The answer is nowhere, at least not yet. There are a couple of different ways. Russell Rhodes and I calculated slightly differently, but we basically come out in the same place. But it's a data point that would be useful for people to have, but nobody seems to care enough to actually make the data available publicly. And I'm not going to go into the data publishing business. So, if you want to know what VIX 30 is doing, follow me
Subscribe.
on Twitter. Yeah, follow me
You
on
could,
Twitter or subscribe to
you,
VIXology.
yeah, you could say that's not a dirty word.
So, who trades VIX futures was another question, and the answer is, uh, there are certainly a number of hedge funds, who are going to use VIX futures either to express a short volatility bet or to hedge. They might be using VIX futures in combination with options. And remember that the options settle to the futures, not to spot VIX. Spot VIX is completely untradeable. So if you're trading VIX options, you better recognize that your underlying is the futures, not the spot. Um, we also, have the exchange traded products, and it seems like we get a new one every month. Um, and most of those use the VIX futures either to be long the futures or short the futures as part of the package of holdings behind the exchange traded product. So SVIX, UVIX, UVIXY, SVIXY, all of those guys are using VIX futures as the portfolio, as the underlying portfolio. Why should we
Okay.
care about the middle of the VIX futures term structure, months 4 to 7? This goes back to the chart that I showed. Let me just dial back to it. This goes back to right here. This is basically comparing that middle part of the VIX futures term structure to the short end of the VIX futures term structure. And so the reason that it's interesting and useful to pay attention to the middle of the VIX futures term structure is, it can give you some guidance as it changes relative to the short end. It's given you some information about how people are changing their positioning. How do you
Okay.
know when a volatility spike is over? You don't.
Right. You guess.
Now you can throw some math on whatever you want to look at, whether it's spot VIX, the VIX futures. You can say, as you and I were discussing, has this gone about as far as it ever has gone historically? And so you can, you can begin to get a sense of whether something has gone as far as it might reasonably go. But as we've learned in episodes like COVID, in the tariff tantrum, certainly spot VIX and the VIX futures and the SIBO, indices can go a long way pretty quickly. And there's nothing to say that they can't keep going um, in the short
Yeah,
term.
yeah.
You know,
Ad infinitum.
yeah, what I say is, look, if you're lucky enough to spot a VIX spike, coming,
Yeah.
and you're in a trade that's going to benefit from a volatility expansion, um, you can't know how far it's going to go and how long it's going to last. You just
It's
can't.
like it's a top pick, and
You,
you can't know.
yeah, so what you need to do is you just need to have a plan,
Yeah.
whatever your plan is, and assume that you're
But
not going to get.
the major purpose you put all this time into is not for knowing when the volatility spike is over, but to lighten up on risk before risk off happens. Is that correct?
I think that's a good use for the work that I do is to have a better sense of what the conditions in the market are, so that you can assess, how much risk you've got in your portfolio and whether you're comfortable with that risk.
Yeah.
I say, look, even if you're a long-term investor, you're a buy and hold investor, just having the peace of mind that says, conditions are good, or to have the peace of mind to say, there might be a wobble in here. Either I just sit tight and ignore it, but I don't get rattled by it. I don't make a dumb decision because of it.
Yeah, you're not getting longer.
Yeah. Yeah. Or you could say, even if you're a longer term investor and you're periodically putting cash in the market, so maybe this helps you decide when you're going to put some cash to work. Here
Okay.
comes a dip. Let's put some cash to work. So, whether you're a day trader or a buy and holder, it seems to me that having, some methodical sense of what market conditions look like is valuable.
Okay. And your favorite
Last
way to
question, what's your
trade?
favorite way to trade volatility and why? I'm kind of an outlier or an outsider in this regard because, the smart kids trade the futures, the smart kids trade option structures, and I prefer to use the volatility exchange traded products, in both directions. If I want to be short volatility, my favorite product is SVIX. I know the people who created it. I helped them in that process. And on the other side, whether it's VXX, VIXI, UVIX, um, you know, add spice, to your particular taste.
What's your average hold on any of these positions you take?
Well, it varies dramatically because, if we go back to this, Uh, you know, you could have been short volatility if you bought SVIX on May 1st,
Hmm.
and have continued to hold it. You're up. I think the last time I looked, you were up more than 60%.
Yeah.
That's
Okay.
pretty good.
Yeah, it is.
Um, if you're trying to trade one of the drops in the market, one of the spikes in volatility, that holding period is going to be,
Shorter.
days, weeks
Okay.
at the most.
Okay.
You're not holding that position for terribly long. And that's why it's important to have some thoughtful exit strategy. It's one thing to get in the trade. One of my mentors, Van Tharp, may be a familiar name to some people, was famous for saying, it's not the entry, it's the exit. And so if you don't know how to plan an exit from a long volatility trade, you're going to kick yourself because um, the max profit will be disappearing while you're trying to think about how to get out.
Okay, Jim. So, Jim, you have your Substack letter. You could be
Yep,
followed on X at Fixologist. But what you really do is manage retirement money. Is what your major, well, not just retirement money.
correct.
You manage accounts for people that this is their way of accumulating wealth, and you do it as an RIA, correct?
Yes. Yeah, Ballast Rock Private Wealth is the firm that I am part of. And we work with, high net worth individuals, families, trusts, donor advised funds,
Okay.
all manner of vehicles to help people, grow and protect the hard-earned wealth that they've created.
Okay. And
So,
uh,
on the screen is my email and
yeah,
the Twitter and the Substack and
take a
uh,
screenshot, everybody, because I can say this, Jim. How many portfolio managers would have a background in risk like you do through your studies of VIX products? Or let me put it this way, how many portfolio managers even know about VIX? All right, so
well,
there I rest my case.
most of them are familiar with the term,
Yeah, yeah.
and 99.9% of them haven't spent, 2 hours paying
For
attention to
them,
it.
their risk off strategy still, Jim, after the bear market we've seen in debt and debt instruments,
Hmm.
a bond portfolio is still their risk off position.
Right.
Okay, even after 50% haircuts in the last several years.
And
So,
and I suspect that even when the Fed reduces interest rates at the short end, and it's a when because I don't know if Powell's going to do it in September, but Trump is re-engineering the composition of the Fed. If people have not seen the tweet that Jim Bianco put out yesterday or the day before, go find it because he maps out all of the ways that the current administration can essentially
take over the Fed.
take over the Fed, and either minimize its impact or control its impact. It's a little frightening. We should be frightened, but I suspect that to the extent that the Fed tries to bring the front end of the term structure down, um, the bond market is not going to just follow suit at the medium and long end. I think there's a very real possibility that they lose the long end and that
Yeah,
people who have long duration bond portfolios are going to get another kick in the you know what.
yeah. So more duration risk ahead with what's
I
going on
suspect there will be.
at the Fed. So,
Hmm.
Jim, I want to thank you. It was really creative to put out the questions of what people wanted to know. Besides everything else you do, you're an educator. And, that's an important thing to, give people knowledge so that you may never do business with them, Jim. But what they did was they learned from you and they were able to sidestep a landmine here and there, and you've made a difference in their life. So I want to thank you for coming here all these years and edifying the faith community.
Well, just following in your fine footsteps, Coach.
Okay, well, don't trip like I do. You'll see. All right. Anyway, Jim, always great talking to you, buddy. I hope you have a wrap up the summer. We get some nice signals, a little more action in the fall, and look forward to talking to you again November-ish.
Outstanding. I'll be
My,
here.
tr- all right, my trading warrior brother, Jim Carroll. Follow him at VIXologist on X and check out his Substack and, educate yourself. Okay. And the VIX is not dead. It just, it's like Rip Van Winkle. It may go to sleep for a while, but it wakes up, right? So, everyone, have a great trading day. You could join the team in 7 minutes on the morning edge and don't just count your volatility instruments, count your blessings, and I'll see everyone tomorrow. Adios. Thanks again, Jim.
Cheers.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.